If you're watching the crypto market, Bitcoin just took a significant dive, wiping out $140 billion in market cap. Traders are cautious ahead of Fed Chair Powell's remarks, even as Bitcoin ETFs show renewed institutional interest, like a tug-of-war between macro fears and fresh capital. While $85,000 acts as key support, China's reaffirmed crypto ban adds another layer of uncertainty to this volatile digital ledger. A BlackRock-linked wallet just moved $186 million in Bitcoin, and what it means for the market isn't what you'd expect. On-chain data shows, 156 BTC went to Coinbase Prime, an institutional settlement platform, not a retail exchange. Experts confirm these movements are routine ETF liquidity, settlement, or rebalancing flows, not a sign of impending sell pressure. The SAHARA token, backed by major investors, just saw its value plummet by over 50%. This dramatic drop to an intraday low of $0.0346 occurred rapidly, sparking panic selling and raising significant market concerns. While the team later confirmed no security breach or token unlock, this incident underscores the extreme volatility and inherent risks within AI-themed altcoins. Could Ethereum be on the brink of a major breakout? Analysts point to crucial indicators suggesting a climb to $4.200. Santiment's low stablecoin yield suggests the market hasn't topped, potentially pushing ETH to $3.200. It's like a car's engine not overheating, indicating more room to accelerate. Combined with the December Fusaka upgrade, improving market structure, and declining exchange reserves, some project ETH could reach $4.200 by year-end. Forget what you know about meme coins. A new Layer 2 project, Little Pepe, is building an ecosystem to redefine the space. Pepe has already raised over $27.4 million in its pre-sale, offering a fast, low-cost, and bot-resistant environment for meme token trading. Backed by a certificate audit and strong community support, this project aims to provide real infrastructure, setting it apart from typical hype-driven tokens. Despite Solana's recent price dip, a massive $1.3 billion in stablecoin liquidity has flowed back into the network. This isn't speculative hype. Meme coin trading is at a 2-month low, with capital rotating towards core infrastructure like real-world assets. Solana's RWA value surged 15%, and it now leads Ethereum in weekly active users, signaling a long-term growth trajectory. Despite major bullish catalysts like an upcoming ETF and falling exchange reserves, Chainlink's price is forming an alarming bearish pattern. Link has plummeted 53% from its peak to $13. Even as Grayscale prepares to launch its Spot Link ETF next week, mirroring demand seen in Solana and XRP ETFs. Technical analysis reveals a head and shoulders pattern, signaling a bearish forecast, with a potential drop to $10, possibly even $8. A critical technical pattern is taking shape in Solana's chart, and it could signal a significant price movement. Analysts are observing an inverse head and shoulders pattern, suggesting a potential breakout towards $160 from its current $137 level. This setup is anchored by a major ascending trend line and a falling wedge, but a drop below key support levels would invalidate the bullish outlook. Top analysts are now confirming a critical, often overlooked link between Bitcoin's recent plunge and the surprising sell-off in the stock market. Crypto margin calls, driven by high leverage, are forcing investors to liquidate stocks for liquidity, creating a domino effect. Furthermore, Bitcoin's volatility is being used by algorithmic traders as a proxy for speculative fever, triggering broader market sell signals. While gold and stocks soar on 87% Fed rate cut odds, Bitcoin's price is surprisingly stuck below $93,000. Derivatives show caution with low futures premiums and more put options, indicating traders are hedging against downside risks. Weak ETF inflows and speculation around corporate Bitcoin movements further limit its breakout potential, keeping investors focused on the $90,000 support level. If you're tracking Dogecoin ETFs, a critical detail just emerged that could change your perspective. While GDOG and GWOW accumulated nearly $2 million, their daily inflows plummeted 80%, a stark contrast to other crypto ETFs. Analysts set 8 cents as support and 20 cents as resistance, with potential for a rally to 80 cents if accumulation holds, but a break below 8 cents would reset the cycle. Top analysts are baffled. Ethereum's biggest upgrade is days away, yet long-term holders are selling off their holdings at an alarming rate. The Fusaka upgrade, launching December 3rd, promises an 8x increase in data capacity, near-instant transactions, and lower Layer 2 fees. However, despite these technical leaps and strong network activity, this accelerated sell-off raises critical questions about ETH's immediate future.